Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, February 7th, 2023. Before we jump into the charts like this one, just please click like if you would each and every time you watch the daily Tesla report. Subscribe to the Wicked Stocks YouTube channel. You'll be provided notification every time we upload new content. That includes the daily Tesla and daily Apple report, along with an assortment of other occasional weekly videos we put out. And if you would, please share the content with friends and colleagues. So I'm going to start with the big picture as usual and work my way in. Long term, we came off of this channel structure about 6 weeks ago that is dropping at a linear pace. 86.48 to 98.18. It was around 101 and change at the time, and we almost hit it to the very tick before rallying over the last month or so. On the way up, we had considered this former channel structure that is presently 154.57 to 162.68 on the weekly chart as able to contain monthly buying pressures, and from there we could fall back to this channel structure here within a month or two of testing that area. But that positive earnings that came out a couple of weeks ago launched this market to close that week above this area. And once that occurred, I have been anticipating this 255.69 long-term channel top as a realistic 2 to 3 month target. And it's in the 230s, 240s, 230s as we move into March and April. And it really is more of a 230s, 240s objective I'm ultimately anticipating, which is now at 255.69. So let's take a look at the daily chart. One notable event that occurred on Monday was a settlement below this long-term speed line, 1/3 speed line, that is today at 191.03. It can contain selling through the rest of the week, and above which, I'm not expecting 256.49 anytime soon, but I do think there's a case to be made that perhaps by Friday's close, we can rally up to this 208.24, 50% retracement from the August high from last year against the more recent low in early January. I think that is realistic. On the way up today, you can see 198.92. That is the high area the last couple of days. It could still give the market trouble, but I think on the next attempt, on the next test of 198.92, we could push through it. And if we do push through it early enough in the day, we just might reach this 208.24, 50% retracement level on an intraday basis, where I would anticipate a daily high. Now, 208.24, for those of you who are big picture traders and you're investing or options trading over at least a 2 to 3 week time horizon, maybe a 1 to 2 month time horizon, the 208.24 level does mark the beginning of a zone of Fibonacci resistance, I'll call it, up to 221.25, which is a 3/8 upside AB. A being the all-time high from November of 21, B being the recent January low. 208.24 up to 221.25. I wouldn't be surprised to see this contain buying into, possibly through March trade. And from here, we could fall back into the zone of support again, 155.24 to 163.64, within 3 to 5 weeks of doing so. And we'll just take those downside targets one day at a time based on speed lines and channel formations that are coming up. Now, of course, I'm still anticipating that 259 structure that I can show again right here, 255.69 actually. And the last thing I'll say about this Fibonacci area is that if we were over the next few weeks to close above 221.25 rather than falling off from it into March trade, then we're probably 3 to 5 weeks away from reaching that targeted 256.49 level. And so that's why I call it a 2 to 3 month objective. And I think it is still realistic that over the next few months, we can push and actually test this channel top at 256.49, which is dropping into the 240s in the next couple of weeks, and then the 230s, so forth and so on. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So So this is a good chart to actually talk about the downside today, a 191.03. If we break or open below it, I don't expect to see 173.46. I'm going to show a better image of that in a moment. But I do think what is possible if we break 191.03 is 182.87, which is just a short-term channel bottom that is rising on a daily basis. Under other circumstances, I might call this a daily containment, session containment, and you may actually consider it to be that strong. If we break or open below 191.03, 182.87 in reach, and we just might bottom out here for the day. But if we close back below 191.03, I do think that the 170s are in reach over the next few days. Couple of days. This area is rising aggressively, steeply, I should say, and it is a rising 1/3 speed line projected off that January low based in part on the Friday high, the pullback high. We also have a rising channel bottom that is over the last month or so. They both come together in the 173.46 to 174.23 region. I don't expect to see this area today, but I will say under some unexpected incident or circumstance, if we were to break 182.87 today, then yeah, we just might test this 173.46 to 174.23 region on an intraday basis. And above this area, the 173.46 to 174.23 region, bullish momentum from the January low remains intact, and we can continue pushing on into new high territory. That 221.25 level I mentioned a moment ago in reach over the next few weeks, holding above 173.46. And as I said earlier, that 250s resistance, 256.49 in reach, possibly by the end of March, so long as we continue holding above this 173.46 area. Now, it's not going to happen today, but if we did over the next few days, for instance, close below this combination speed line channel bottom, 173.46 to 174.23, it'll be higher number tomorrow. If we close below it, that actually reverses near-term momentum. And by that, I mean over the next 1 to 3 weeks at the most, probably more like 1 to 2 weeks, we fall to the 137.69 rising 2/3 speed line. When you close below a rising 1/3 speed line that is presently 173.46, the objective becomes the rising 2/3 speed line at 137.69 and rising. And I think I mentioned yesterday that this speed line is rising over the next week and a half into the 150s. And why I mention that is because the 150s are still meaningful. 155.24, 163.64, this former channel support, then resistance, and now support again, will be converging over the next week and a half with this rising speed line at 137.69. So the point I'm really making is, while I'm sort of disregarding this band of channel support as not significant right now in terms of trend identification, it can regain that foothold, if you will, over the next week or two. If we were to sell off and over the next, say, 3 to 5 days, close below this 173.46, then we pivot south into later February. And by that point, this will have converged, actually, 137.69 with that long-term channel structure presently in the 155.24 to 163.64 region. So that was a lot to say just now, but the bottom line with Tesla is we're buying pullbacks in the 170s and rising, 173.46 to 174.23. And yesterday's settlement above that 191.03 speed line may well yield now 221.25 to the upside over the next couple of weeks before we even come close to testing this 173.46 to 174.23 area. We can use 191.03 as a base of support into later week, and from here 221.25 in reach by the end of next week. If we close back below 191.03 today, that pivots the market south into later week, and we should by Friday's close then test that 173.46 to 174.23 area, where we can bottom out into March, and above which we maintain a bullish dynamic as we move into the second quarter, still anticipating this 255.69 channel top. You know, I think I've said enough for today. Thank you for listening. Please click like if you would and subscribe. I'll be back tomorrow, of course, with Wednesday's Daily Tesla Report.